Hi guys, this is your friend Alfred again coming up this morning with a brand new video talking about cryptocurrencies. Today, this is a part three of a series of video that I've been producing. So I have a part one, part two, and this is a part three of what I called things you should know before getting into investing in crypto markets. So these are some type of information that I've been sharing, and if you haven't watched those previous series, part one and part two, so I recommend that you watch them so you can get the totality of all the information that I've been sharing. With that being said, of course, this is not a financial advice, so this is only for entertainment purposes. And like I used to say, I'm the other guy on the internet to try to share good information with you. So what I want to share today is what they called FOMO in crypto market. FOMO, I can spell it FOMO. So it's kind of a jargon in the crypto market that is fear of missing out. So people have fear of missing out something in the market. So why this thinking? This type of things happen when people are trying to swing the market one way or another. And then when people see that, oh, the market is turning down or the market is down, they think about their investment. They're thinking about losing the totality of their investment. So they rush and they sell some of their assets at loss. And then in the other hand, when the market is going up, and people think they are going to miss out something, and by fear, they try to get into the market by buying. Sometimes they might be buying too high. So this type of sentiment in the market, that's what they call FOMO. You hear people saying that FOMO in, FOMO out, all those type of things. So in this type of situation, if you are kind of a long-term investor, you just have to hold tight. Don't get into that panic mode so you can see clearly what's happening in the market. So the other things you hear in the market is something they call FUD. So what is FUD? FUD is spelled FUD. FUD is a fear, uncertainty, and a doubt. So it's a kind of intentional spread of misinformation. So there is a lot of people out there in the market. You can see some big players like big banks or some, individual big players. They can try to send misinformation in the market so they can swing the market, so they can turn the market down. Why they do that? Because they have a lot of cash on hand and they want to buy, or they want to get into the market, but they want to buy the lowest price. So when they send those information, if you are a holder, what you need to do is just to hold tight, not to worry too much about those information. Of course, this is not financial advice, but this is what I would do. So the fraud, they're out there, so you have to be ready just in case you see something like that. So there is something also that they call in the crypto markets, in the crypto arena, dollar cost average, DCA, dollar cost average. So what is dollar cost average? So dollar cost average is a strategy for an investor to spend some type of money in a small increment. For example, if I want to invest $1,000 in the crypto market, I can go in by a small increment of 200. So why this strategy is helpful? Is it helpful? Because if you put all the whole 1,000 into the market, and then something happened, and then the market turned down, you see, you're gonna be on the losing side. But if you put 200 and then the market go down, so you have an opportunity to buy again in the low price, and then you can get to the market. When you get into those small increments, everything gonna average out at some point, and you're gonna be in a good standing. So this is what they call dollar cost average. It's a good strategy that I personally use, and a lot of people that I know use as well. So, like I said, of course, this is not a financial advice. So I'm just sharing those information with you. There is something also that is called buy the dip. You hear people buy the dip. So buy the dip is also an investment strategy. This strategy tell you to just hold off buying high. If you're in the market, you just wait for an opportunity for the market to goes down, and then you see that the market is down, and you can buy the dip. You can buy the lowest price. But how do you know that the market already bottomed down? Nobody have the crystal ball to predict that this is the lower or the bottom that you can buy. So it's all depend on you. So you have to use your own strategy, your own thinking, to figure out, oh, this is a dip for me, so I can get into the market and just scoop a little bit of crypto. Or if you can put a little bit money there, and then wait a little bit to see if the deep gonna be going deep again, and then you can scoop a little bit more. So it's all depend on you. It's all depend on your strategy and your experience when you come to the market. So this is not something that you can do very quickly, but you have to have some experience with investing in the market, and it should be clear for you. Of course, this is not financial advice. So, the other thing I want to share today is what type of cryptocurrencies we have out there. You hear people talk about altcoins. So, what type of cryptocurrencies do you have there? So, what is altcoins? So, altcoins are all the coins that are not Bitcoin. So besides Bitcoins, all the other coins, they are referred to as altcoins. Some people say they are alternative. So altcoins, they are all the coins that are not Bitcoin. That's how some people they classify them. So they classify coin like in three type of coins. We have Bitcoin, which is the king of the kingdom, Bitcoin. And then we have the altcoins, and then we have another type that they call tokens. So I didn't understand this before until I did some research on that, and then I found out that the altcoins, they are built on their own blockchains. So the altcoin, they are built on their own blockchain, and they are a form of currencies. So all the altcoins that all the coins that are classified as altcoins, they are built on their own blockchain, and they are referred to as currencies. Compare that to the other type that they call tokens. So the tokens, they are also built on the blockchain, but they are not a form of currency. So what are tokens? So tokens are also on the blockchain, but they are a type of assets on the blockchain that can be programmed to do something else. An example of a token is you can have a digital asset on the blockchain that deal with electricity. You can also have a digital asset that deal with, for example, coins that people can collect. We have a digital asset that is categorized as tokens that is also in the advertisement area. An example is a coin that is called basic attention. Basic attention is one popular coin, and the coin is BAT, boy, apple, Tom, BAT. So basic attention. So this coin is built on the Ethereum platform blockchain and is used in advertisement. So this is kind of a coin used in advertisement to reward all the people who produce content. It's a kind of coin that is used in advertisement. So this is the three main categories or type of coins that exist. If I can summarize, we have Bitcoin, and then we have anything that is not Bitcoin that is called altcoins, and then we have the tokens. Like I said, altcoin, they are built on their own blockchain and they are a form of currencies. And the tokens, they also built on the blockchain, but they're not considered as currencies. Instead, they are a form of coins that are used for other things, such as advertisements, for the case of BAT, basic attention. So this is some of the addition I want to share today. But before I close today, I just want to share the global cryptocurrencies chart with you. If you can see my background here, this is the global cryptocurrencies chart, just to show you how important the cryptocurrencies are today. As you can see the screen, if you can see crypto over here, there's a lot of crypto. We have more than 12,000 different cryptocurrencies. And then we have exchanges. I talked about that in my previous videos. We have exchanges, the platform designed to buy and sell cryptocurrencies. We have more than 414 exchanges out there around the world. And today, the market cap, all the money globally that are put into cryptocurrencies, they are a little bit far from $2 trillion. So it's 1,800 billion. So it's a little bit shy of $2 trillion. Look at this. 24 hours volume. You see how much money people are putting out there. $94 billion just in the last 24 hours. Meaning that cryptocurrencies, they are here to stay. They have so much importance. This is not financial advice, but I'm just sharing this information with you. So if I can move down a little bit and to show you the chart. So this is the global cryptocurrency chart. And this chart is pulled from a website that we call coinmarketplace.com. So as you can see the chart, I just want to show you something here. Look at 2018. See 2018 over here. In 2018, the market cap was $772 billion. $772 billion. And then, the market was going a little bit sideways, back and forth. And then look at the peak over here. Look at the peak over here. This is 2021. This 2021 over here. So the market peaked to over $2 trillion. It was $2,443 billion. You can see that. So this is what's happening in the crypto market. And then it bounced back. And today, as I'm producing this video, today, let me see if I can, yes, this today is Tuesday, September 28th. This is the market cap. So the market dropped a little bit, and then the market cap is a little bit down. So it's $1,800,000,000,000. So I just want to show you this to see how crypto is kind of growing and how things are moving up in the crypto area. So this is all that I have for you today, that I want to share with you today. So if you like this video, please give it a thumb up, and then if you want to help our channel grow, please subscribe to this website, to this channel. And then if you haven't watched the previous video, try to watch them to get all the information that I have shared. I just want to thank you for watching, and I will see you in the next one. Bye now.